There's a reason why we don't want to invest in the stock market. Now, as we know, the stock market is one of the best ways to actually get some good returns on your money if you are, say, a long-term investor. Now, one of the problems that we have is that we see the fluctuations in the stock market and we usually get scared, and due to fear and worry, we think, well, we don't want to take a chance. And trust me, the first time you invest in the stock market, you're probably going to lose some money. Why? Because the value of your investment could go down the next day you invested your money. So it's part of the journey. In as much as we do not have maybe as much money as those guys would do, like the billionaires, for example, we also need to be able to tap into some of the things that they do. And hopefully we can level up our income, or at least our finances. Now, why am I bringing this to you? We are striving to make ends meet. We are trying to live a better life and just have things that we desire. And to be able to afford it, we need to also be able to not just work, which means earn some money, but we also need to be able to let our money work for us. And that's the beautiful thing about the stock market. So in this video, I'll be sharing with you how you can get started with investing in the stock market. And I'll also share with you what you should consider investing in. And of course, I would also give you a good mindset that you should have when it comes to investing. You have to understand that this is not a get rich quick scheme. It does take a bit of patience and of course, a long-term mindset. So if you're new here, welcome. And if you're a returning subscriber, thanks for joining again. As we go along in this video, if you find value along the way, please don't forget to drop a like. And of course, don't forget to subscribe. It all goes a long way. Now let's get into it. The S&P 500, which tracks the 500 largest companies in the United States, is currently up around 11.68% as of year to date. And the reason why this is important is if you think about the money that you put in your savings account or even your high yield savings account, generally will not give you that much of return. Also, to give you a broader perspective of how the stock market has done in the last 5 years. In the last 5 years, the S&P 500 has returned around 54.5%. And that is something that you cannot really get anywhere else, unless maybe you win a lottery or something like that. Mind you, this also includes the times when we experienced the crash in 2020 due to COVID, and of course the big swings we've been having through this year. But the point here is, if you've invested some money in the S&P 500, say 5 years ago, your money would have at least be up by at least 50%, assuming you invested in an index fund or ETF that tracks the S&P 500. So this begs the question, how do you start investing in the market? One of the simplest ways to get started is, of course, to open a brokerage account. Now, before you go ahead and open a brokerage account, consider making sure that your other finances are in good standing. In this case, if you have a lot of debt, try to manage your debt and try to maybe pay it off if you can. If it's something that you think it's going to be long-term, let's say it's a student loan debt or maybe it's mortgage or it's a car loan, those can usually be managed over time while you still invest in the market. But let's assume that you have credit card debt. You have to remember, a credit card debt will generally, have an interest rate of maybe 20 to 30%. And that is too much for you to bear if you're trying to invest in the market. So best advice is whatever money you have should be paid towards the credit card to pay it off. And then you can start to invest in the stock market. Of course, you can use the links below to use that Robinhood or M1 Finance to get started. Now, by using those links, you get some free stocks, and that's the best way to actually get started also. So once you open your brokerage account, my recommendation is to find the simple index funds ETF to invest in. For example, VTI or VOO. You can choose either of these two. These are great ETFs to start with. And you can also invest as little as you want. You can start with $10, you can start with $50, you can start with $100. Best advice, start with something, maybe if you have $1,000, you can invest maybe $500 in one and find another ETF to invest another $500. Or you can choose, if you know that you want to start investing on a regular basis, you can choose to put in your $1,000 this month, and maybe next month you put another $1,000 if that's what you can afford. But remember, you don't have to start with that much money. You can actually start with just $50, with just $20. And by getting started now, remember, 5 years from now, the stock market is not guaranteed to give you a certain return, but over time, based on history, we know that it's constantly gone up. So if you want your money to work for you, the best thing you can do is to get started now. The best time to have started investing is yesterday, but another good time to invest is today. So it's never too late to get started. I hope that you guys have found value in this one. If you have, don't forget to drop a like. And of course, don't forget to subscribe to the channel. I'd love to see you in my next one.